What's happening, crypto fam? Happy Friday. Good morning and welcome back to Love for Crypto. I'm Scott and thank you for taking the time out to consume the content. I truly appreciate it. This morning I want to talk about how JP Morgan and Fidelity could leverage blockchain to modernize financial services. They will leverage blockchain to modernize financial services. They will do it, but this is one person's view of how they will do it and could do it. Hence his title, How They Could. We all know they will. Blockchain's going to change the world. It's just a matter of time. It already is changing the world. It's changed my world. We are at the beginning of a new decade and there is a lot of excitement in the technology space due mainly to the emergence of new technologies like blockchain, artificial intelligence, robotic process automation and financial instruments and concepts involving digital assets and cryptocurrencies like Bitcoin and Ethereum. In 2019, we saw a race among the leading financial service enterprises who sought to establish their leading positions. These enterprises included JP Morgan, Bank of New York and Banco Santander, alongside newly emerged players like Bakkt and Fidelity, digital asset focused only on digital assets. So Bakkt and Fidelity, they're not necessarily just they're just currently focusing on digital assets, aren't they? I mean, they're all going to do everything down the line, make no mistake of that, whether they're just doing digital assets now or cross-currency payments or fucking diamonds on Everledger. You know, whatever it is, they're all going to do. They're all going to be on the internet value, basically. They're all be in the same fucking web. Excuse me. For most large retail and investment banks, blockchain technology makes sense only when it is applied to a large network and at scale. Logically, we saw the launch of private banking networks like the Interbank Information Network, which boasts 365 members, and Utility Settlement Coin USC, whose participants include Credit Suisse, ING and UBS, eventually offering back-end post-trade processing and transactions reconciliation services among banks. However, in this new paradigm of business models, among the main issues that arise from the full embracing of blockchain is the increased need for enhanced data privacy and security, as well as ensuring questions regarding how this can be achieved in truly decentralized, safe and compliant way. Enter multi-party computations, MPCs. Secure multi-party computations are ways of computing a function based on a set of inputs by parties who don't trust each other. Without revealing the inputs, i.e. keeping them private, with the media buzz surrounding privacy-related technologies like zero-knowledge proofs, MCPs are filling a niche where the rest are failing. Interesting. Interesting. At the end of the day, a zero-knowledge proof is only a special case of two-part computation where MCPs can scale up to thousands of participants computing a function in minutes. As one of the leading MCP providers, Ligero has proven that not all the major benefit of secured MPCs is that they provide correctness, enhanced privacy, independence of outputs, fairness, and guaranteed output delivery. So what are the possible use cases for MCPs? I describe several real-world financial service scenarios in which the use of secure multi-party computations provides a solution to existing business and technical pain points. It's all about problem solving for these guys. It's about speeding up, not only speeding up the system, but making sure no one can neglect it or hack it or fuck about with it. i.e. in fighting AML fraud in the banking sector, JP Morgan Chase could be sharing sensitive information about financial transactions with Deutsche Bank and the 364 other member banks on its own interbank information network. Currently, it is very expensive and difficult for a single bank to identify suspicious transactions and have complete end-to-end visibility. due mainly to data privacy regulations and bank-to-bank competition. However, when private data and transactions are shared between banks as a result of MCPs that reveal the outcome but not the input data, we can have a regulation compliant and end-to-end auditable solution. Problem solving, baby. So large cryptocurrency custodians like Fidelity, North Trust, Bank of New York, State Street and Bakkt can leverage MPCs when providing an evidence for private funds' existence without revealing the details and amounts. For example, transactions can be signed by a subset of authorized entities, like 3 out of 5 regulators, 2 out of 3 customers, and 3 out of 5 custodian compliance managers. This, in total, enables 8 out of 13 members, which is enough to complete the signing ceremony. BitGo, Coinbase Wallet, and other large cryptocurrency wallet providers can leverage the benefits of MCPs over current cold storage or hardware security modules. Solutions as MCPs are safer, faster, and easier to use than current multi-signature wallets. By nature, MCPs are decentralized, so they completely avoid the single point of failure dependency from existing solutions. Legacy and digital asset exchanges like the New York Stock Exchange, Nasdaq, Coinbase, and Binance could be sharing KYC data amongst themselves while safely reporting trading activity and compliance data with external regulators. In particular, the cryptocurrency exchanges could also leverage MPCs instead of cold storage and thus provide instant liquidity while increasing their trading volumes and customer satisfaction. It's all about increasing that liquidity, baby. All about that. Similar technical solutions have become crucial in 2020 when trading fees are trending down towards zero. New business models can be created by large cloud and infrastructure providers like Amazon Web Services and Microsoft Azure as MPCs. Can provide security and service and privacy as service models at scale for any niche and vertical. So I'm sure there's typos sometimes. I think, what the fuck did I just read? I want to do it right. So regulators are already warming up to the technology, as evidenced by the fact that multi-party computation-based startups accounted for most of the startup submissions that England's Financial Conduct Authority, the FCA, received for fighting AML, anti-money laundering. Multi-party computations can be used in conjunction with machine learning when one is dealing with large volumes of transactions or KYC data between financial services, enterprises, custodians, broker-dealers, and regulators. This way, the use of MCPs could lead to data-driven and privacy-friendly way of engaging in early-stage detection of fraud, thereby resulting in massive savings. Interesting. Overall, the use of secured MCPs could make hardware security modules obsolete, as hardware security modules can be expensive and slow ways of providing trusted execution environment. Hardware security modules also present issues with scaling and security. There is also a strong demand from venture capital investors in MCP-focused companies, and we saw the increase in startups that focus on multi-party computation research and services like the previously mentioned Ligero. Additionally, Curve and Unbound are focusing in the same space. Our first product is an MCP protocol for setup ceremony, similar to Zcash and Aztec ceremony, that we built the VDF Alliance, steered by Ethereum Foundation, and runs in under 5 minutes up to 1,000 parties and 30 minutes for 10,000 parties. That was Matthew DeBise, co-founder and CEO of Ligero. Multi-party computations represent a truly exciting technology that will pick up speed in the new decade. They've been a vital part of Hyperledger Avalon, which focuses on off-chain computation, while the other 8 major enterprise blockchain player R3 is also researching trusted computations in its own project, Conclave. More to that we know, more to that we already have MCPs taking a main stage at cryptocurrency conferences like Real World Crypto 2020, and are excited to see their outcome in real world financial services scenarios when they are used in large enterprise blockchain enabled models. Now, guys, there is a lot to take in there. Go on, just get on it, on Forbes. Go and have a little look. MCPs, it's, when the SEC was on the other day, did people see the SEC on the other day when he was talking about intranet, the intrawebs and all that shit, and the mainframes? So, excuse me, so back in the day when it was first building the internet, you all just had these mainframes and disconnected networks where you could send emails within your own mainframe, but you couldn't send it out of it to another one. Until Internet Protocol came about, IP Internet Protocol, with value. So they're doing it again now. All this, what we've just been talking about, Santander with their MCPs, JP Morgan, backed, Fidelity, Bank of New York, Bank of America, Bank of this, Bank of that, all building the intranetworks of their own system and their own network, and then the ILP, Interledger Protocol, is what will be combining them all. And there's only one. There's only one it's turning to at the moment in it, and it's simply XRP. I am fascinated and super interested in when a competitor's going to come along, and I mean a legitimate competitor. No, don't start putting XLM in the comments, guys, because that's not a legitimate competitor. That's basically the Fed's wet dream. So we stay clear of that shit. But just do a bit of your own research. Never telling you to go and buy anything. I'm telling you to go and research it and possibly buy it, because I have. And then, yeah. So always do your own research. Don't invest in anything you're unsure about. But seriously, get sure about the Internet of Value. Get sure about all this shit and capitalise on it. And invest in your future. Invest in yourself. And yeah, it's extremely exciting times, I think. It's all just being built. We've just got to wait. Just got to wait, man. And seriously, people should be fucking happier. I'm not even back in work yet since Christmas. Get fucking happier, guys. Seriously. It's not the end of the fucking world. Yeah. I'm debating going live tomorrow for a little chinwag. People have asked me some questions and that, so in the comments, if you do want to see a live stream at some point tomorrow, let us know in the comments and I'll make sure you get one. I was also debating, it's either that, like, ask me anything at my computer, or I'm going to go to town and hopefully just randomly ask people live on YouTube if they know what XRP and blockchain and distributed ledger technology is, and if they don't, invite them to DLTCon Manchester in September. Squirrels are out. What's up, lads? Morning. Yeah, guys, you know the script. Don't delay. Invest today in whatever you feel comfortable investing in. Do your own research. Live long and hodl. Hey, Lefty nearly didn't do it then, you know, he was really... Live long and hodl, guys. Health and happiness. Wishing health and happiness to you and yours. Enjoy your Friday. Enjoy your weekend. Much love. We love crypto. We love XRP. We love you. Fuck yeah. And peace out.